This is the USA Emergency Broadcast Network, your source for reliable disaster preparedness information.
The views and opinions expressed on this program are not necessarily the views of this station, its management, sponsors, or other hosts. If you have any comments or suggestions about this program, please contact us at radio@usaebn.org. That's radio@usaebn.org.
All right, this is a hold up. Give me all your debt and no one will get hurt. Man, did I screw that up again? You know knowledge is power. Money is power, but you need to have the knowledge on how to keep your money in order for there to be any type of power. Here on the USAEBN's Financial Preparedness Show, we will try and uncover the knowledge you will need in order to prepare your finances to handle any type of stormy weather ahead of us. So our slogan here is knowledge over money equals power, squared. Welcome to the USAEBN's Financial Preparedness Show. Please consult your financial advisors before acting on any information you might hear on this show.
The mission of financial readiness. Welcome to Financial Readiness, brought to you by USA Emergency Broadcast Network, where we believe that knowledge over money equals power, squared. I'm Tony Parker, and today we're starting a conversation that could change the way you think about your financial life forever. Let me ask you something. When was the last time you felt truly prepared for what's next? Not just hopeful, not just optimistic, but prepared. Because here's the truth. In today's world, financial resilience isn't optional. It's essential. This show isn't about chasing wealth or bragging about investments. It's about building a foundation strong enough to withstand the storms, economic shocks, job loss, medical emergencies, even natural disasters. We're talking about readiness, not reaction. Planning, not panic. Now, before we dive in, let me share why these matters to me, and why it should matter to you. I've spent years on both sides of America's financial and political power centers, Capitol Hill and Wall Street. I've seen how policy shapes markets and how markets shape lives. And I've learned one thing. The people who thrive in uncertainty aren't the ones with the biggest portfolios. They're the ones with a plan. So today, we're going to break down what financial readiness really means. We'll talk about why it's different from traditional personal finance, why it matters now more than ever, and how you can start building your own system, step by step. By the end of this segment, you'll have a clear picture of what readiness looks like, why it's urgent, and what your first move should be. Ready? Let's get started. Defining financial readiness versus traditional personal finance. Here's the first big idea. Financial readiness is not the same as personal finance. Personal finance is about optimizing, maximizing returns, minimizing taxes, building wealth over decades. That's important, but readiness? Readiness is about resilience. It's about making sure you can absorb shocks without losing stability. Think of it like this. Personal finance asks, how do I grow? Financial readiness asks, how do I survive and adapt? It's budgeting with flexibility, saving with purpose, and planning for scenarios most people hope never happen. Why does this matter now? Because the world is volatile. Inflation is eating away at purchasing power. Digital risks, from identity theft to ransomware, are everywhere. And economic signals? They're flashing yellow. If you've ever felt that knot in your stomach when you hear about layoffs, rising interest rates, or another cyber breach, you're not alone. But here's the good news. You can take control. You can build systems that protect you, your family, and your future. Economic volatility, inflation, and digital risk. Let's talk about the landscape we're navigating. Inflation isn't just a headline, it's a reality. Prices for essentials, food, housing, healthcare, are climbing. And when inflation rises, your emergency fund needs to stretch further. Then there's digital risk. Every time you log into a bank account, pay a bill online, or store a password, you're exposed. Cybercrime isn't just targeting corporations anymore, it's hitting individuals hard. Elder fraud, phishing scams, identity theft, they spike during crises because fear makes people vulnerable. And economic volatility, it's not going away. Markets swing, jobs disappear, and global events ripple through your wallet faster than ever. So what's the answer? It's not panic. It's preparedness. The preparedness mindset. Planning over panic. Here's the mindset shift. Stop thinking in terms of what if, and start thinking in terms of when. Because disruptions aren't hypothetical, they're inevitable. Preparedness means you don't wait for the storm to hit before you buy an umbrella. You build systems now, budgets, savings, insurance, cybersecurity habits, so when the unexpected happens, you're steady. And let me tell you something, this isn't about fear. It's about freedom. When you know you can handle a job loss, a medical bill, or a natural disaster without spiraling into chaos, that's real security. Case study, a family navigating job loss and medical bills. Let me share a story. A family I worked with, 2 kids, a mortgage, both parents employed, thought they were fine. Then one parent lost a job. 2 weeks later, a medical emergency hit. Suddenly, they were juggling unemployment checks, hospital bills, and credit card debt. What saved them wasn't luck. It was a plan. They had an emergency fund. They had a budget that flexed. They had insurance they understood. And because they'd prepared, they avoided bankruptcy and kept their home. That's financial readiness in action. Step by step, building your financial foundation. So how do you start? Here's the framework. Track your spending. For 7 days, write down every dollar. Awareness is step 1. Build a bare-bones budget. What's the minimum you need to keep the lights on and food on the table? Start your emergency fund. Even $500 can make a difference. Aim for 1 month of expenses, then 3. Secure your digital life. Strong passwords, 2-factor authentication, and a password manager. A review insurance, health, auto, home. Know your deductibles and coverage gaps. I'll create a financial binder, copies of IDs, account info, insurance policies, and emergency contacts. Mailbag, how do I start if I'm living paycheck to paycheck? Great question. Here's the answer. Start small. Round up your change. Save $5 a week. Cut one expense, streaming, takeout, whatever, and redirect it to savings. Progress beats perfection. Building resilience through action. Reinforcing the preparedness mindset. Let's pause for a moment and really think about what readiness means in practice. It's not about predicting the future, it's about preparing for possibilities. You can't control inflation. You can't control layoffs. You can't control natural disasters. But you can control your response. And that response starts with clarity. Clarity about your numbers, your priorities, and your options. Because when chaos hits, the last thing you want is confusion. Why financial readiness matters now more than ever. Here's the reality. We're living in a time of overlapping risks. Economic uncertainty, digital threats, climate events, they're not isolated anymore. They stack. And when they stack, they strain your finances in ways traditional advice doesn't cover. Think about it. A job loss during a recession feels different than a job loss in a booming economy. A medical emergency during high inflation hits harder than one during stable prices. And if you're dealing with identity theft on top of all that, it's overwhelming. That's why readiness isn't a luxury. It's a necessity. Practical framework, the 3 layers of financial readiness. I want you to picture your financial life as a 3-layer system. Foundation, your essentials. Housing, food, utilities, transportation. Buffer, your emergency fund, insurance coverage, and debt strategy. Flexibility, your ability to adapt, side income, benefit literacy, and contingency planning. When these layers are strong, you can absorb shocks without collapsing. Case study, the power of a buffer. Let me share another story. A single parent I worked with had a modest income and 2 kids. When the pandemic hit, hours were cut, and childcare costs spiked. But here's what made the difference. They had a 3-month emergency fund. That buffer gave them time to adjust, apply for benefits, negotiate bills, and find remote work. Without that buffer, they would have faced eviction. Step by step, strengthening each layer. Here's how you build those layers. Foundation. List your non-negotiables: rent, food, utilities, transportation. Cut the fluff. Streaming, subscriptions, impulse buys, they're optional. Buffer. Start with $500. Then aim for 1 month of expenses. Then 3. Automate savings. Even $10 a week adds up. Flexibility. Learn your benefits: HSA, FSA, COBRA, unemployment options. Explore side income, freelance, gig work, skill-based services. Digital defense. Your invisible shield. Now, let's talk about something most people ignore until it's too late: cybersecurity. Your financial life is digital. Your bank accounts, your credit cards, your retirement funds, they're all online. So here's your checklist. Use strong, unique passwords. Enable two-factor authentication on every financial account. Consider a password manager. Monitor your credit regularly. Because the cost of ignoring this, it's not just money, it's time, stress, and identity. Mailbag. What if I can't save much? Another great question we hear all the time: what if I can't save more than a few dollars? Here's the truth: progress beats perfection. If you can save $5 a week, do it. If you can cut one expense and redirect that money, do it. Readiness isn't about big leaps, it's about steady steps. Weekly habit reminder. Your habit this week: track every dollar for 7 days. Awareness is power. The psychology and practice of readiness. The psychology behind financial preparedness. Let's talk about something most people overlook: the mental side of money. Because financial readiness isn't just about numbers, it's about behavior. It's about how you think under pressure. When a crisis hits, emotions spike. Fear, anxiety, even shame, they cloud judgment. And that's when people make mistakes: cashing out retirement accounts, maxing credit cards, falling for scams. Preparedness is the antidote. When you have a plan, you reduce panic. You replace fear with clarity. You know your next step before the storm hits. Why planning beats reacting every time? Here's a truth I've learned from years in finance and policy: reacting is expensive. Planning is powerful. Think about it. If you wait until a layoff to figure out your budget, you're already behind. If you wait until a hurricane to check your insurance, you're already exposed. Planning doesn't eliminate risk, but it gives you control. And control is what keeps you steady when everything else feels shaky. Advanced tools for resilience. Now, let's level up. You've got the basics: budget, emergency fund, insurance review. What's next? 1. Scenario planning. Write down 3 what-if situations: job loss, medical emergency, natural disaster. For each, list immediate actions, available resources, backup options. 2. Income diversification. One job is one point of failure. Explore side gigs, freelance work, or skill-based services. Even $100 extra a month adds resilience. 3. Benefit literacy. Know your options: HSA, FSA, COBRA, unemployment benefits. These aren't just acronyms, they're lifelines. 4. Debt strategy. High-interest debt is a vulnerability. Create a payoff plan. Start with the smallest balance or highest interest, whichever keeps you motivated. Case study: the family that turned chaos into control. Here's a powerful example. A couple with 2 kids faced a double hit. One parent lost a job, and a storm damaged their home. But they had a plan. They knew their bare-bones budget. They had a binder with insurance policies and emergency contacts. They had a small side gig that kept cash flowing. Was it easy? No. But they avoided foreclosure, kept food on the table, and rebuilt without drowning in debt. That's readiness in action. Mailbag: how do I stay motivated? Great question. Here's the answer: focus on progress, not perfection. Celebrate small wins: $50 saved, 1 debt paid down, 1 password secured. Readiness is a journey, not a sprint. Weekly habit reinforcement. Your habit this week: track every dollar for 7 days. Awareness is the foundation of control. Closing reflection. Here's what I want you to remember: financial readiness isn't about fear, it's about freedom. It's about building a life where uncertainty doesn't derail you. Start small. Stay steady. And remember, knowledge over money equals power, squared. Welcome back to Financial Readiness, the show where knowledge over money equals power, squared. I'm Tony Parker, and today we're tackling something critical: how to read the economy and protect your assets when uncertainty is the norm. Because here's the truth, the signals are out there. Inflation, unemployment, GDP, they're flashing every day. But most people don't know how to interpret them. And while you're trying to make sense of the headlines, scammers are waiting in the shadows, ready to exploit fear and confusion. So in this segment, we're going to do two things: decode the economic indicators that actually matter for your wallet, build a safety net against fraud, identity theft, and digital risk. By the end of this conversation, you'll know how to spot trouble before it hits, and how to lock down your financial life so you're not an easy target. Let's dive in. Decoding economic indicators: CPI, unemployment, GDP. First up, economic signals. You hear these terms all the time: CPI, unemployment rate, GDP, but what do they really mean for you? CPI, Consumer Price Index. This measures inflation, how much prices for goods and services are rising. If CPI is up, your dollar buys less. That means your emergency fund needs to stretch further, and your budget needs to tighten. Unemployment rate. This tells you how many people are out of work. Rising unemployment often signals economic slowdown. Translation: job security becomes fragile, and you need a backup plan. GDP, Gross Domestic Product. This measures the size of the economy. When GDP shrinks, businesses cut costs and jobs. When it grows, opportunities expand. Here's the takeaway: don't just glance at headlines. Understand what these numbers mean for your household. If inflation is high, prioritize essentials and build cash buffers. If unemployment is rising, strengthen your resume and explore side income. What inflation means for your wallet. Let's talk inflation. It's not just a number, it's a pressure point. When prices rise, your emergency fund loses power. That $1,000 cushion? It covers less than it did last year. So what do? Review your budget quarterly. Adjust your savings target for inflation. Lock in fixed costs where possible. Think insurance premiums, loan rates. Inflation isn't a reason to panic, it's a reason to plan. Cybersecurity basics for financial safety. Now, let's shift gears. Because while you're watching the economy, scammers are watching you. Cybercrime is booming. Phishing emails, fake investment schemes, ransomware, they spike during crises. Why? Because fear makes people click. Here's your defense. Use strong, unique passwords. Enable two-factor authentication on every financial account. Update your software regularly. Never click on links from unknown sources. Think of cybersecurity as your invisible insurance policy. Case study: elder fraud and identity theft. Let me share a story. A retired teacher received a call claiming her social security number was compromised. The caller sounded official, even gave a badge number. She panicked and gave her bank details. Within hours, her account was drained. This happens every day. And it's preventable. The rule: never share personal information over the phone. Hang up. Call the official number. Verify before you trust. Step by step, creating a financial emergency binder. Here's a powerful tool: a financial emergency binder. It's your go-to resource when chaos hits. What goes inside? Copies of IDs and insurance policies. Account numbers and contact info. Benefit details and emergency contacts. A simple checklist for next steps in a crisis. Store it in a safe place, fireproof box, encrypted drive. Because when stress is high, clarity saves time. Toolkit: identity theft recovery plans, password managers. We've got resources for you. identitytheft.gov, step-by-step recovery plans. Password manager recommendations, tools to keep your credentials safe. Links are in the show notes. Mailbag, should I freeze my credit? Great question. Here's the answer. Yes, if you're not planning to apply for credit soon. Freezing your credit prevents new accounts from being opened in your name. It's free, and you can unfreeze anytime. Weekly habit. Your habit this week: set up two-factor authentication on all financial accounts. It's simple, and it's one of the strongest defenses you have. Here's what I want you to remember. Signals tell you what's coming. Scams exploit what you fear. Safety nets protect what you've built. Stay informed. Stay alert. And stay ready. Outsmarting scams and building digital armor. The rise of crisis scams. Let's start with a hard truth. Scammers love chaos. Every time there's a crisis, economic downturn, natural disaster, pandemic, they swarm. Why? Because fear makes people vulnerable. Here are the most common scams during crises. Government imposter scams, fake IRS or Social Security calls demanding payment. Disaster relief scams, fraudulent charities asking for donations. Job offer scams, fake remote work opportunities that steal your data. Investment scams, guaranteed returns during market volatility. The pattern is simple. They exploit urgency. They want you to act fast without thinking. How to spot a scam before it hooks you. Here's your checklist. Pressure tactics: act now or lose everything. Red flag: unverified links. Never click on links in unsolicited emails or texts. Requests for sensitive info. No legitimate agency asks for your social security number by phone. Too good to be true offers. If it sounds magical, it's probably a mirage. Pause. Verify. Protect. Advanced cybersecurity strategies. Basic steps are good, but let's go further. Password manager. Stop reusing passwords. Use a manager to generate and store strong credentials. Virtual private network, VPN. Encrypt your connection, especially on public Wi-Fi. Credit monitoring services. Get alerts for suspicious activity. Freeze your credit. Prevent new accounts from being opened in your name. Think of these as layers of armor. The more layers, the harder you are to breach. Practical drill. Your cyber hygiene checklist. Here's an exercise for this week. List every financial account you have: bank, credit card, retirement. Enable two-factor authentication on all of them. Update passwords to strong, unique ones. Check your credit report at annualcreditreport.com. This isn't optional anymore. It's survival. Case study: the cost of complacency. A small business owner ignored cybersecurity because it seemed complicated. Then a phishing email hit. The result: $12,000 drained from accounts, plus weeks of stress and recovery. The lesson: complexity is cheaper than catastrophe. Mailbag: is identity theft recovery expensive? Here's the truth: it can be, but prevention is free. If you're hit, start at identitytheft.gov. They'll guide you through recovery steps, including fraud alerts and credit freezes. Weekly habit reinforcement. Your habit this week: two-factor authentication on every financial account. It's the single most effective step you can take today. Signals tell you what's coming. Scams exploit what you fear. Safety nets protect what you've built. Stay informed. Stay alert. Stay ready. Your safety net in action. Building a financial emergency binder, the complete guide. We've talked about the concept of a financial emergency binder, but now let's make it real. This binder is your lifeline when chaos hits. It's not just paperwork, it's peace of mind. Here's what goes inside. Identification documents, copies of driver's licenses, passports, social security cards. Insurance policies, health, auto, home, life, plus contact numbers for claims. Banking information, account numbers, routing numbers, and customer service contacts. Debt details, loan agreements, credit card info, payoff strategies. Benefit information, HSA, FSA, COBRA, unemployment benefits, Medicare details. Emergency contacts, family, financial advisor, insurance agent. Action checklists, what to do in case of job loss, medical emergency, or natural disaster. Store this binder in a fireproof box or encrypted digital format. And update it every 6 months. Because outdated info is almost as bad as no info. Toolkit walkthrough, identity theft recovery plans, and password managers. Let's talk tools. These aren't just nice-to-haves, they're essentials. Identity theft recovery plans. Start at identitytheft.gov. It's the official resource for step-by-step recovery. They'll help you place fraud alerts, freeze your credit, file reports with the FTC. Password managers. Stop using Password 123. A password manager creates strong, unique passwords and stores them securely. Options include LastPass, 1Password, and Bit. Warden. These tools aren't complicated, they're lifesavers. Mailbag. Should I freeze my credit? Reinforced. We covered this briefly, but let's emphasize. Freezing your credit is one of the best defenses against identity theft. It's free, reversible, and effective. Do it today if you're not applying for credit soon. Weekly habit reinforcement. Your habit this week. Enable two-factor authentication on every financial account. It's quick, and it's powerful. Here's what I want you to take away. The economy sends signals. Learn to read them. Scammers exploit fear. Learn to spot them. And safety nets. They're built before the storm, not during it. Preparedness isn't paranoia, it's power. And when you have systems in place, you don't just survive uncertainty, you thrive through it. Stay informed. Stay alert. Stay ready. Your financial contingency plan, starting strong with planning for emergencies and building resilience. Your financial contingency plan. Welcome back to Financial Readiness, where knowledge over money equals power, squared. I'm Tony Parker, and today we're talking about the ultimate safety net, your financial contingency plan. Because here's the truth, disruptions aren't rare anymore. Job loss, medical emergencies, natural disasters, they're part of life. And if you don't have a plan, you're gambling with your future. This segment is about resilience. It's about creating systems that keep you steady when everything else feels shaky. By the end of this conversation, you'll know how to prepare for the big three: income shocks, health crises, and climate events. Let's get started. Planning for job loss, medical emergencies, and natural disasters. First, job loss. It's one of the most common financial shocks, and one of the most stressful. Here's your checklist. Build a 30-day bill plan. What's the minimum you need to keep the lights on? Identify non-negotiables: housing, food, utilities, insurance. Create a cash buffer. Start with 1 month of expenses, then aim for 3. Next, medical emergencies. Even with insurance, out-of-pocket costs can crush a budget. Know your deductible and out-of-pocket maximum. Keep a healthcare emergency fund separate from your general savings. Understand your benefits, HSA, FSA, COBRA options. Finally, natural disasters. Hurricanes, floods, wildfires, they're hitting harder and more often. Your plan should include cash on hand, ATMs fail during power outages. Insurance review, flood, wind, and fire coverage. Disaster aid resources, FEMA, SBA loans, local relief programs. Insurance literacy, deductibles, riders, exclusions. Insurance is your financial armor, but only if you understand it. Too many people discover coverage gaps after disaster strikes. Here's what to check. Deductible, what you pay before insurance kicks in. Riders, add-ons for specific risks, like flood or earthquake. Exclusions, what's not covered. Read the fine print. If you don't know these details, you're exposed. Benefit navigation, HSA/FSA, COBRA, Medicare. Benefits can feel like alphabet soup, but they're lifelines. HSA, Health Savings Account, tax-advantaged savings for medical expenses. FSA, Flexible Spending Account, pre-tax dollars for healthcare costs. COBRA, lets you keep health coverage after job loss, at a cost. Medicare, know your options before you need them. Understanding these benefits isn't optional, it's survival. Case study, a small business owner facing a hurricane. Here's a real-world example. A small business owner in Florida faced a Category 4 hurricane. Power out. Store flooded. Income gone. What saved them? A contingency plan. They had a 30-day bill plan. Cash reserves for payroll. SBA disaster loan application ready. Insurance coverage for business interruption. They didn't just survive, they reopened in 60 days. Step by step, creating a 30-day bill plan and cash buffer. Here's your action plan. List your essential expenses for 30 days. Cut everything non-essential. Build a cash buffer. Start small, grow steadily. Automate savings. Even $20 a week adds up. Toolkit, FEMA aid links, SBA disaster loans, benefit checklists. Resources you need. FEMA.gov, disaster assistance and claims, SBA.gov, small business disaster loans, Ready.gov, preparedness checklists. Links are in the show notes. Mailbag, how do I prepare financially for climate events? Great question. Here's the answer. Review your insurance annually. Keep cash on hand. Store documents in a waterproof, fireproof container. Know your local relief programs. Preparedness isn't just physical, it's financial. Weekly habit. Your habit this week. Review your insurance policies and update coverage. Don't wait for the storm. Closing reflection. Here's what I want you to remember. Contingency planning isn't about fear, it's about freedom. It's about knowing that when life throws a curveball, you can catch it. Start today. Stay steady. And remember, knowledge over money equals power, squared. Your financial contingency plan, focusing on retirement readiness, income protection, and advanced strategies for resilience. Securing your future beyond the crisis. Retirement readiness in an uncertain world. Let's talk about something that often gets pushed to the back burner during emergencies: retirement. Because here's the truth, crises don't pause your long-term goals. If you're mid-career or nearing retirement, volatility can feel terrifying. Markets swing, inflation eats into savings, and fear tempts people to cash out early. But here's the rule: don't panic sell. History shows that reacting emotionally during downturns locks in losses. Instead, review your asset allocation. Are you diversified? Keep enough cash for emergencies so you don't raid retirement accounts. Understand your withdrawal options: 401k, IRA, Roth IRA, and penalties. Preparedness means balancing short-term survival with long-term security. Income protection, your invisible safety net. Income is your engine. When it stops, everything else stalls. That's why income protection matters. Options include disability insurance, replaces income if you can't work due to illness or injury. Life insurance, protects dependents if the worst happens. Business interruption coverage, for entrepreneurs and small business owners. These aren't luxuries, they're lifelines. Advanced contingency strategies, ready to go beyond the basics. Here are 3 advanced moves. 1. Layered emergency funds. Short-term, cash for 30 days of essentials. Mid-term, 3 to 6 months of expenses in a high-yield savings account. Long-term, investments for resilience, bonds, diversified funds. 2. Benefit maximization. Use employer perks, tuition assistance, wellness stipends, legal aid. Explore government programs, SNAP, housing assistance, tax credits. 3. Scenario drills. Practice your plan. What happens if you lose your job tomorrow? Who do you call? What bills do you pay first? The time to think is now, not in the middle of chaos. Case study: the couple who planned ahead. A couple in their 50s faced a sudden layoff and a medical diagnosis. But they had a layered emergency fund, disability insurance, and a clear benefit strategy. Result: no debt spiral. No panic. Just execution of a plan they built months earlier. That's the power of readiness. Mailbag: how do I prepare financially for climate events? Reinforced. Here's the answer. Review insurance annually, especially flood and wind coverage. Keep cash on hand for power outages. Store documents in waterproof, fireproof containers. Know your local evacuation and relief programs. Climate risk isn't theoretical, it's financial. Weekly habit reinforcement. Your habit this week: review your insurance policies and update coverage. It's boring, but it's the difference between recovery and ruin. Here's what I want you to remember. Resilience isn't built in a day. It's built in layers: cash, coverage, benefits, and mindset. Start small. Stay steady. And never underestimate the power of planning. The final layer of readiness. Your ultimate contingency checklist. We've covered a lot in this segment: job loss, medical emergencies, natural disasters, insurance literacy, benefits, and income protection. Now, let's pull it all together into one master checklist. Your financial contingency plan checklist. 30-day bill plan. Know your essential expenses. Cash buffer. Start with 1 month, aim for 3. Insurance review. Health, home, auto, life. Check deductibles and exclusions. Benefit literacy. Understand HSA, FSA, COBRA, Medicare. Emergency binder, IDs, policies, account info, contacts, action steps. Digital defense, password manager, two-factor authentication, credit freeze. Scenario drills. Practice your plan for job loss, medical crisis, and disaster. Toolkit access, FEMA, SBA, Ready.gov, IdentityTheft.gov. This isn't just a list, it's your lifeline. Toolkit recap. Where to find help when you need it. Here are the resources you need to bookmark today. FEMA.gov, disaster assistance and claims. SBA.gov, small business disaster loans. Ready.gov, preparedness checklists. IdentityTheft.gov, recovery plans for fraud victims. Annualcreditreport.com, free credit reports from all bureaus. These aren't just links, they're bridges to recovery. Here's what I want you to remember as we wrap up this entire series. Financial readiness isn't about fear, it's about freedom. It's about building a life where uncertainty doesn't derail you. Start small. Track your spending. Build your buffer. Secure your digital life. Review your insurance. And most importantly, practice your plan. Because when the storm hits, and it will, you won't panic. You'll execute. You'll adapt. You'll thrive. Knowledge over money equals power, squared. And now, you have the knowledge. Stay prepared. Stay steady. And I'll see you next time.
You have been listening to USAEBN's Financial Preparedness. Right here on the USAEBN Digital Broadcasting Network. We are not financial advisors. This show is designed to help educate the general public on money matters. Remember, knowledge over money equals power, squared.